I had founded the trading club at Berkeley when it was very, very small. I should be like, the cheerleader for this, but instead, now when I go to Berkeley and I see 150 students in the audience, I'm like, there's not 150 seats in this industry, so even
Welcome to Manifold. My guest today is Max Dama. He is the co-chair of Headlands Technology, a quant prop trading firm in Chicago. Max, welcome to the podcast.
happy to be here. Thanks for having me.
Thanks for coming on. I became aware of you, I think, because I read some stuff you posted over the years online, and we set up a Discord server for this podcast. And there's now about, 600 or 700 people on that Discord server, all of whom are super interesting. But then when you came on, a bunch of people recognized you and started asking you a bunch of questions. So I thought, I should get this guy on the show. So thanks for coming on.
Yeah, maybe two people, but yeah. There's
No,
not many people out there in the trading industry.
It must be more than that. But let's start with your background. So you're from Florida, but you went to boarding school in Tennessee. Is that right?
Yeah, right. So it's Northwest Florida, like the redneck part. At some point, you just kind of run out of educational options. So my older brother, he was smart. I was not really the smart one. I was just kind of like surfing and chilling. And he was in Duke TIP program, so he took the SAT when he was very young. And then he went to this boarding school, and they were like, okay, he's really smart. Let's get his brother. So I went there too. And then I actually became smart in that school. So kind of like learned how to study and got interested in artificial intelligence and trading, and then started to think like, okay, maybe I could start to combine these things. But yeah, I think the boarding school is a really good experience. It's called Macaulay. It's in Tennessee. It's all boys. If you have a son, I would recommend sending him there. I guess your son's a little bit too old.
Yeah, my son's already in college, but interestingly, he wants to be a quant trader like you.
Mm-hmm. Very popular nowadays.
Yeah, so that's something I want to ask you about. So I think you just said that in high school, you were already interested in AI and the relationship between AI and trading.
Yeah, I was doing trading on my own, and I was trying to build some video games on my own. I thought I was like the first one to think that I could combine these two things. So yeah, eventually I went to Berkeley, and then I was still kind of on a different track, but I started a blog about trading, and I was trying to kind of develop my trading ideas and share it with the world. This was like the peak of the blogosphere, when people were reposting each other and meeting each other in person, going to different conferences. So people would contact me through that, and they'd ask me to help program their trading systems and things. So I got some good opportunities to meet individual traders. Like I flew to Korea to program some trading system for one guy, but I didn't know what I was saying, so kind of feel bad for him. I don't think he minded that much either, which is some karaoke.
So you were already interested in the markets and trading, it sounds like, even from high school days. And is that a common thing among traders? Or see, my impression nowadays is that it's kind of the high prestige thing to do if you're kind of a quant oriented person in college. But is it your experience that a lot of the best traders are people who have been interested in it, like kind of like since they were kids?
Yeah, I mean, there's different cycles. So the industry is so young that it's hard to characterize the whole industry that way. But yeah, I think the people that survived in the industry for many years, they were generally like really passionate about the markets themselves. I think nowadays it's changed a lot. So nowadays, a lot of students are just like, okay, that job pays a lot, so I want to get into it. I'm going to practice all these brain teasers, which I kind of see as a little bit negative indicator. So I think it's better if people are just interested in the problems themselves, because it is a struggle. Yeah, it's not just like some easy career path.
Those are points I want to revisit in just a minute, but I want to focus a little bit on your development as a young person. So you went to college at Berkeley, pretty far from, the South. How did you choose that place, and what did you want to do in college?
I went to a summer program at Stanford when I was in high school, and I really liked the West Coast, and then applied to Stanford, didn't get in, got into Berkeley. So went there, but I was very happy with it. I mean, Berkeley was great. There were so many Nobel laureates. So every semester I just tried to take every class that sounded interesting to me and I thought could be applied to trading. So I ended up taking like all different machine learning courses and randomized algorithms and things that you just couldn't really take at other schools because they wouldn't be big enough. So yeah, then I did a series of internships in trading, which I had just hustled to find them. Like they weren't posted anywhere. Like one guy, I had to write like a small trading system for him to apply for the internship. And then that team shut down 6 months after I left. It was pretty tricky back then. And then I interned for one hedge fund in San Francisco, which was led by Astor Taylor, who went on to become the head of Google X. That hedge fund didn't really make much money, but a lot of interesting people there. When I was getting near graduation, I was applying to different firms, but it was very hard to find different firms back then. So got rejected from a few and then found Headlands through like a series of connections. And they were just starting up in San Francisco at that time. So joined Headlands. And I had a trading blog when I was in college. When I joined Headlands, I had to kind of shut down that trading blog. So I converted it to PDF and then release it on the internet. And somehow in the following 15 years, like not many people wrote anything too useful about trading. So still that PDF kind of circulates and every now and then people contact me about it. So it's been interesting to kind of see that thing have its own life.
So that PDF, which it's quite long, right? Is it like 60 pages long or something, or maybe more?
Yeah.
Yeah. So it is like a mini guide, informal kind of intro to trading. And I've seen it online. I think, not many people are going to sit down and write something that extensive, right? So
yeah, I didn't either. Like, I mean, I had that blog for 4 years, and then the blog content also became basically a syllabus for a student club or student-led class at Berkeley about trading that I taught for 4 semesters. So I was just trying to kind of build a community and meet people, but it was so small back then, nobody really knew about trading. So yeah, that kind of community didn't really develop much. I think out of my graduating class, maybe there's only 3 people left, or my graduating class plus the year older and the year younger, just 3 people left. But yeah, that PDF, it wasn't written overnight. It was like the syllabus, and that's why I had a nice structure. And then when I released it as a PDF, that was just so that it wouldn't get deleted off the internet.
But you are unusual that you had this interest, and it sounds like you even structured your undergraduate, the courses you took, and you spent 4 semesters teaching a class on trading. So you're sort of like the OG trader, right? I mean, how many, like, okay, there are stories about Ken Griffin trading bonds from his Harvard dorm room or something, but pretty unusual, right? There are not a lot of people like you.
Yeah, I mean, there are plenty out there. Like, I've met so many people over the years, because once you're in the industry, you know so many people. So like, there's a guy, you can find him online, Gary Basin. He's active on Twitter. But he had run his own trading firm from his dorm room. So he was way more successful than me from like in terms of just the trading system in college. And I mean, there are many, many people like that. So I wouldn't say I'm like the OG or like anything special there. I mean, everybody who had previous firms prior to me did similar things. So yeah, I had set up my own like AWS server, and I was kind of running my strategy. I don't think it had any alpha. I don't think it was making any money. If I let it run longer, it probably would have been under drawdown. So.
But now I think from your bio, it says, I think you ended up did you earn 3 simultaneous degrees at Cal? It's pretty impressive, right?
Yeah, I mean, I ended up with 4. So
4, all right.
I was just taking every class. So every semester I'd take like 6 or 7 classes, because I was like, well, this is a huge smorgasbord of like interesting ideas. And at Cal, you could take graduate classes if you were just like willing to sit in the back and then ask the professor every week, hey, can you enroll me? Can you enroll me? And then once people drop. So yeah, I ended up like near the end, I just looked at my course list and I was like, hey, I think I have the requirements to satisfy all these majors. Then I went to the registrar and was like, hey, can you just write these down? They're like, no, there's only 2 entries. I'm like, just write it. And I actually didn't think they'd let me graduate with that, but they did. So. But anyway, I wouldn't recommend it. I was just kind of confused about what I wanted to take.
Now, is there anything that stood out to you? Because I'm guessing most of these professors, they might be experts on machine learning or algorithms or applied math, but most of them don't really understand the markets. I would even say most economists don't understand, things like bid ask and price structure, microstructure. Most people don't really understand that. So like, were you listening to some guy who's like the world's expert on linear algebra and in the back of your head thinking like, oh, I could use that for trading? Like, well, what's your thought process during these years?
Yeah, exactly. I was like reframing everything in terms of trading problems. There was one professor, John McAuliffe. He was a student of Michael Jordan, the Bayesian guy and neural net guy.
Yes.
He had come back to Berkeley to found Voleon, but at that time I didn't know he was founding Voleon. He had just been a professor, and I was like, oh, I think you worked at the DHL before that. So I tried to take his class and talk to him every day, and he wouldn't talk to me. I didn't want to share the secrets. So, but yeah, I mean, I would just try to think on my own, like, okay, how can I use this genetic algorithm, or how can I use this support vector machine? There were no neural nets back then as support vector machine or Bayesian learning.
Now, I think there's one, now I can't remember his name, but there's one math or stats prof at Cal at Berkeley who I think he was early in Renaissance. I don't know if that rings a bell with you.
Yeah, Brokamp.
Burrowcamp, that's right. Elvin Burrowcamp.
Yeah.
Yeah.
Elwin Brokamp. Yeah, I met him once in Berkeley because he had come back to Berkeley to found a new trading firm. I think it was called like Berkeley Trading. It didn't last very long. And when I met him, he was very, very old. So we weren't really able to communicate much. But yeah, it was an interesting place. Like I think I saw David Shaw walking down campus one time. And yeah, so a lot of people around there.
Incredible. My academic background, because I come from physics, and most of my, the kids that I was in college with and grad school and wrote papers with, I think at least half of them are in finance now. But very few of them are like really hardcore traders, because I don't think they had that focus that you had on it. They were more like, oh, I want to be a physicist or something. And then later they realize, oh, they'll pay me a lot of money to price derivatives or something. And so to me, the trading mentality, like the idea that you're going to develop some system that has alpha and back test it and do all this, it's something I didn't really actually encounter that much of, even though I know tons of people who now currently work in finance. I'm curious if you ever heard of, there was an early physicist maybe named Osborne, who maybe wrote this like very old book that talks about market microstructure and stuff. I don't know if you've ever seen this book, but that's like the very first like academic type study I've seen of topics related to this kind of thing.
Yeah, no, I haven't. Yeah, I'm surprised because, I mean, I guess there's just been these different phases of the quant kind of moniker where, so there was a person who wrote a book called like My Life as a Quant,
Yes.
Darman. And so I can kind of fill in these gaps that were before my time. And I think when people were developing Black-Scholes and all the different option pricing models or derivative pricing models or portfolio optimizers, then they had a big need for physicists. So a lot of physicists came to the industry. But I think nowadays, a lot of those problems are mostly solved. At least there's not a lot of like very fundamental research of like just brand new models from scratch. You might be doing modifications of existing models. But like in my generation, there weren't many physicists going into, say, trading. So I'm more like in HFT trading. It's mostly computer science people. And so maybe in your generation, it was like physicists pushing out investment bankers. In my generation, it was, computer scientists pushing out floor traders. There's a famous picture of like Stamford, Connecticut, UBS trading floor with thousands and thousands of desks. And then 8 years later, it's totally empty. So I feel like, yeah, whenever a new technology comes along and then the skill set that you need to, build things with a new technology changes, then you see these shifts. But I wouldn't say necessarily that like physicists are highly represented in like HFT space, maybe more in setup or longer frequencies, which maybe we can talk about later.
Yeah, I think you're right. I mean, I think it's much more CS type people. Now, at the time when a lot of my friends were going into finance, leaving physics, and they ended up doing stuff like options pricing theory and stuff like that, there was this mysterious group of people out on Long Island, the Renaissance guys, and nobody knew what they were up to. And I'm curious, when you were coming up, were they still a kind of mysterious, iconic firm for you? Or did you think about them at all?
Yeah, definitely. Yeah, they're still mysterious. I think they're, one of the most mysterious firms out there. So when I was coming up, I guess the biggest trading firm was Getco. So I was trying to meet people there and I had some contacts there. So I was trying to organize events with them at Berkeley, but we ended up having to bus down to Stanford. But yeah, they were kind of like doing 50% of the market volume at that time. So at least on the more like HFT space, they were the big one. But yeah, I think Renaissance has always been a little bit longer term, but nobody really knows. So
yeah. And do you find, like, for the kind of trading that you do you end up in a situation where there's only a certain amount of capital you can deploy fruitfully and it ends up being basically just the firm's own money after a while? Or do you guys still take tons of LP money from outside?
Oh, no, it's very capital constrained. Yeah, I don't think there are any major HFT firms that have outside money. So, I mean, basically what you see is like if somebody is trading and then their Sharpe ratio goes above like a 3, then they will buy out the outside investors. And then because like basically if your Sharpe ratio is 3, then maybe your returns are 30%. So that means every year you're basically getting 30% profit. So you can start to buy out the investors pretty quickly.
Right.
Assuming there's not infinite capacity, which there's basically never infinite capacity. So yeah, for HFT, if the returns on capital are higher, then you can buy them out even quicker. So sometimes a new startup will have some outside investor for like a year or two, and they'll have some special structure, and then they'll buy it out eventually.
Got it. So when you first started, were you confident? Did you say like, hey man, I'm going to go in there and I know I'm going to figure something out. I'm going to have some serious alpha? Or did you have like a worry in the back of your mind, like some guys are going to back me and I'm going to start trading, but maybe it's not going to go well for me? Like what were you thinking?
Yeah, I didn't really know what to expect going into the industry. So, I mean, the way it works is things are a lot more collaborative. It's not like you have your own strategy and you have a backer. So everybody's working together. We're building a large software system together. I think I definitely had a lot of imposter syndrome for many years, and probably I was kind of imposter. Like I just didn't know what was going on, and I had to ask people for help with C++ and things like that. So I think it's healthy also to be modest and be humble. But no, I mean, I was like building the trade system, so I was just like showing up every day and having that opportunity.
How much of the barrier to getting into this is the infrastructure, like the software infrastructure? It sounds like a huge amount of energy and talent goes into that, and not all firms, I would guess, can actually build good infrastructure.
Yeah, for sure. Yeah, I think that's basically what it is building infrastructure.
And so as a guy who can write code and help you build that infrastructure, is that guy as valuable or more valuable than somebody who, is really good at statistical analysis and has lots of ideas? Like what's the kind of trade-off between those different talent types?
Yeah, I think I saw Elon just posted, like there's no more researcher title at Grok or Tesla or SpaceX. I don't know which company he was talking about. It's just all engineers. So yeah, I think it's kind of similar in the sense that like if you're a researcher, you have to implement your ideas. And at some point they kind of outgrow the existing system. And so when you generalize the existing system, you need to do some work to make it actually function in practice. Or you encounter some, barrier like cap theorem where it's distributed and there's just no way to satisfy all the constraints. So if you have some like imaginary idea that you want to try, then maybe it's actually not even feasible. So yeah, I always think the people that go the furthest in the industry are like kind of able to think at the systems level and all different levels of the stack. Yeah, it's basically a technology business. So it's similar to like, Google, Facebook, something like that. And that's usually the type of people that we will hire, or that's the exit opportunities. If people don't like trading, then they'll go to like Google or Facebook.
So you see a lot of movement back and forth between, or you did in the past, between big tech and trading firms.
Yeah. Yeah. I mean, I think basically like historically, maybe there was like a, trading industry and it kind of looked like a trading industry. There's guys in the pit, or there are people trading on screens and they're making kind of discretionary decisions. Then over the years, every year, like the percent of volume trading in the pit would decrease like about 5%. So on each market, it could be agriculture market or energy markets, bond markets, and some were faster, some were slower, but basically it'd be like roughly 5%. And then also, COVID accelerated it. So that was maybe like 10% for the ones that hadn't transitioned fully. But once things tipped to like 80% electronic, then basically all the input to the system is fully digital. And then you can just, think of everything digitally and you can just build models. So like, Google basically digitalized the library, and then all the, people there can make a lot of money because it's like a very scalable business where they can then index all the information with just a team of like 100 people. And I think it's similar with HFT, where you have a small group of people that, as long as all the information going into the system is digital and all the things you're sending out to the market are just digital, you don't have any salespeople or anything, then it becomes, very, very scalable. And it's just building a software system.
Got it. So it seems like to me, like for a young person just getting out of college, like 10 years ago, that the dream job was kind of big tech or something. And now it seems like, talking to my son, that, Jane Street or something like that is like what every kid wants. Well, every kid in a certain category wants to do. So maybe can you talk me through like what happened there? Like how did all these smart kids at all these different schools become aware of just a few firms where they want to work at?
Yeah, I might have a contrary opinion there compared to other people in the industry. So like, I think there's a bit of a lagging effect with recruiting, where people are always reacting to like the offers that they hear in the past or they posted online in the past. And so, trading firms were giving really large offers and they were hiring a lot. And the industry is also very, very cyclical. So whenever, Donald Trump gets elected, then, people in the trading industry are like, okay, there's more volatility coming. So, the profit in the industry is roughly proportional to the volume times the volatility, because like you kind of are participating with the rest of the market. So every price movement and every other trade, you kind of participate with it. So whenever there's something like a war or like Trump, then kind of the overall industry profit kind of increases for a while. but it's cyclical, so it's not going to last forever. And like having worked 15 years, I've seen a lot of different cycles. So yeah, I think basically there was just a big boom like a few years ago because of a confluence of events. And then a lot of people got interested in the industry. And because I had founded the trading club at Berkeley when it was very, very small, I should be like, you know, the cheerleader for this. But instead, now when I go to Berkeley and I see 150 students in the audience, I'm like, there's not 150 seats in this industry, you know, so even maybe there's only 10 big firms and each of those firms only has, you know, like maybe 50 people who are kind of like building a lot of the models. There's obviously more people than that, but like the jobs that people really want, it's a smaller number. So yeah, it's not a big industry. And I think probably the amount of interest by kind of undergraduates right now is a little bit overdone.
I thought I saw numbers saying like if you look at like, you know, market making as an activity and you just sort of estimate what's up for grabs in this whole system, that it could only be like maybe $30 billion a year. Am I hallucinating that?
Yeah, I think a few years ago I would have said it's lower, but I think, yeah, maybe like recently it seems a little higher. I don't know if that's inflation or what. Yeah, something like that. I think that's a pretty good ballpark number.
Right.
So yeah, if you compare it to other industries like the shampoo industry, you know, it's smaller than, you know, something like that.
Right. So I think maybe I saw that in your defense of HFT, like saying that people are making a lot of money and there are people going into it, but it's not distorting all these other industries because it's just too small.
Yeah, it's weird how like in one sense it gets a lot of attention and the other sense it gets a lot less attention. So yeah, I'm not sure why it has that perception.
Yeah, I mean, I'm guilty myself because I am one of these guys because so many of my friends went into finance, not specifically the type of trading that you do, but as we said, a lot of talent, like a lot of people who in a previous era, or if just the macro dynamics were a little bit better for academic research jobs, they would have like stayed in some kind of like frontier science, but they ended up in finance. Over many years, I've written like, wow, I'm not sure that these people are being, I mean, their jobs require a lot of talent, but I'm not sure that they're doing the best thing possible for the overall economy or for society. So I'm definitely guilty of that, although maybe not focused that much on HFT.
Yeah, like I said, I can only think of, I was trying to think before this call of who I know from Berkeley that's still in trading. And I mean, I could think of like John Zhu, he's head of trading at Optiver, and yeah, maybe another guy who's our partner at IMC, Raj Patel. But most people stayed in the industry for maybe like 2 or 3 years and then left.
Well, it's super interesting.
Like I said earlier, once people digitalize trading, then it was amenable to, you know, people with the skill set. So I think now a lot of other industries are being digitalized. So, you know, Google did it for information, and obviously Google's revenue is like orders of magnitude more than trading. So everybody wants to work there, and there's, you know, 20,000 employees or something. Facebook also, you know, digitalized friendship. So now people with our skill set can go there. And I think, yeah, way more people are going to those areas, especially from my cohort. And then with AI, it will kind of digitalize a lot of the real world. So, you know, through robotics or just through like language or vision. So I think those will be the big areas for kind of like people that see themselves as intellectuals or like to operate in information space rather than something more like people or selling or things like that.
So the kids you went to college with, so you said some like a typical modal time to last in the industry is only a few years?
Yeah, definitely. Yeah. And that's why now when I talk to people, I'm like, if you're not really interested in the industry, like probably you should find something else. Like if you're not at least trying to build your own trading system nowadays, you know, it's popular to use Kalshi to build some small market making system when you're in college.
Yeah.
Yeah. If you're not building some trading system on your own, then there's going to be really hard years where, you know, there's high expectation and maybe the market's down or something. And so if people are not passionate about it, then I don't think it's going to work out too well.
Now, are there slots in there for people who just like to, you know, maybe they're not that interested in trading per se, but they just like building systems and, you know, they're software developers. Are you including those guys in this category or just the people who actually like run strategies?
Yeah, I mean, there's a lot of different jobs, right? We have accountants, we have, you know, HR, like, so there's all the normal jobs. And also, yeah, certainly if people like other things, then there's still a lot of places for them. You know, if you just like to code some low latency system, like obviously it's in high demand and things like that. But yeah, I just think if you want to kind of be running a trading firm or like always be thinking about the next step, then you kind of need to be interested in the problem domain itself.
And so for the kind of stuff you do, are you guys almost, typically market neutral? Like you're not predicting directional stuff the way like a macro guy would, right? You're kind of operating without any assumptions like that.
So I think there's a lot of things in trading where like once you work in the industry, you kind of like look at things on a very, very micro scale. So you look at things on a packet by packet basis. So, and then any notion of simultaneity kind of disappears. So market neutral kind of assumes simultaneity. But when you place a trade, like you're sending a network packet over the wire, and if you send one to buy, one to sell, like they reach at different times. And so you could try to time it. Do people try to time it in HFT? Not usually. Like I think in the past, people would really try to remain market neutral, but then that was when they had a lot of edge and they could afford to cross the spread twice just to kind of reduce their risk. And then over time, like the edge disappeared. And so people generally just tried to kind of remain hedged roughly, like kind of just maybe if you're trading frequently enough, kind of by accident, you get some central limit theorem and things cancel out, or maybe after 5 minutes, you eventually find a hedge, rough hedge, but it's not like one-to-one hedging or things like that.
Got it. So the way you describe that is really interesting. You're sending out packets over the network and a buy, a sell, and you're sort of just trying to get an edge on that tiny mechanistic event, right? You're not thinking about summing over like hours and hours of this stuff, but just that microscopic thing. Am I understanding that right?
Yeah. I would say if you're thinking about things on that level, then you're high frequency. And if you're thinking about things on a higher level, then you're, some other frequency, like your stat R and mid frequency. People have different words for these things.
Got it.
Yeah, I would say that's kind of like the distinctive thing of this, like whether you're thinking about individual price levels and individual packets.
So at that level where you're operating, the skill set, is it more like thinking about algorithms in computer science, or is it more like thinking about pure math? What's the number one thing you would look for in an interview?
Yeah, there's not like one thing that you can learn in academia that's going to map directly to trading. So I think, you need to be interested in trading. I think there's, in terms of what you can learn in academia that's useful for trading, like, so yeah, I had a couple of majors. So like in terms of math major, there's linear algebra and numerical analysis. It's kind of like how do you actually implement things with double floating point precision and avoid error accumulation things in algorithms. For math, that's probably it. Like it helps take a proof class so you can just kind of think logically. For statistics, like the trading domain, it's not really anything like IID or driven by any statistical process. It's just that these tools happen to work. So it helps to have that toolbox of like linear regression, trees, neural networks, and you kind of just try them with oftentimes some kind of very weird parameters that you wouldn't normally find in statistical applications, like a lot of regularization or things like that. But yeah, in terms of statistics, if you just take maybe like a couple of classes there to kind of get an intuition for probability distributions and uncertainty, reasoning about uncertainty, and some of the kind of machine learning toolbox. And then computer science, I think everything in computer science is useful because you're just encountering all these problems on a day-to-day basis. And it's an interesting situation where you actually do have to optimize for everything. There is no premature optimization. Like you have to make it fast, you have to make it fit in memory, both for kind of the inference step, the production training step, and also the research process where you're iterating over historical data. So yeah, everything in computer science is useful, like implementing a programming language. Berkeley has a very infamous class on that. It used to be taught by this guy, Helfinger, gravitated toward that class. Implementing an operating system, because for trading, you have to bypass everything in the operating system and kind of like re-implement it yourself. Network protocols, like for trading, you always implement your own network protocols to try to strip off all the bytes in the header and avoid like rate limiting things. And then obviously the lower level ones on just data structures and software engineering.
So, what you just said, it makes me think you understand this area literally from the ground up, from the bits, from the electrons up. Is that true for everybody in your industry, or are you special in that way?
Yeah, that's true for everybody. Yeah, I'm not special. And I think there's even some people that know it a lot better than me. So there's a lot of tricks that people will use to kind of, and you can read about them online every now and then. So especially if you read, what's a good one? So Eurex Exchange. Eurex Exchange is the largest futures exchange in Germany. And they will publish some white papers about their architecture of their matching engine, and they'll explain why they're changing their architecture. And it's because somebody is sending a packet to them and the header is not quite fully completed because they want to like lock up a spot in the switch, and they'll just complete it later. So that gives them a few nanoseconds speed up, like things like this. So I've never had to deal with things like that, but there are definitely people that are like even lower level than me.
I think there was some old case, maybe involving Renaissance and two Russian guys who had been trained in physics. And there was some lawsuit. And if you looked at the documents, they were claiming they were actually told to do things which, could be considered like network hacking on maybe the market making server or something. Anyway, back in the day, this was like a big deal, I think. But it sounds a lot like what you're describing now.
Yeah, there are always these things that pop up, and they're not that huge in the industry. Like, they're not that significant. Like, most of it is just having a really good system that does everything well. But it is fun to talk about these little things. Like, I think at one point, maybe Singapore had banned microwave lines, but somebody had set up their own microwave in a tower, and then the competitor found out about it through kind of like interviewing people at that firm, and they put aluminum foil outside the tower to block it because like they can't complain to the authorities because what they were doing was also illegal. So just some crazy things like that. There was a movie about some of these things called Hummingbird Project. I think it had Salma Hayek.
Oh, I think I saw that. Yes.
Big actors. It was not a commercial success, I don't think, but if you're in the industry, it's kind of fun.
Okay, tell me if this is wrong, but it seems to me that you need to be above some level of ability, to master all these different things in the stack that you're talking about. But it seems like interest and obsessiveness is probably as or more important. And so this idea that like, oh, you need to be an IMO gold medalist to do this kind of work, like, is that just misleading? I mean, how important is that kind of genius to this kind of job?
I mean, I think those people can probably do a lot of things well. So I think for me, I definitely didn't have that. So I was just interested in the problem, and I think that was enough for me.
Yeah.
But yeah, I mean, I have worked with people that are much smarter than me. And I think there's been different phases in my career where I was like, okay, there is a 10x engineer, there's not a 10x engineer. Like, I think before I went to Berkeley, I thought, okay, there are definitely like super geniuses out there. And then I went to Berkeley and I did 4 majors. I'm like, I'm not very smart because I like even did the math competitions and I failed in them, right? And I had an older brother who was way smarter than me. So I was like, okay. Then I was at Berkeley. I'm like, okay, actually, there's not any super genius people. And then I worked at Headlands and, then met some super genius people. So I think there's been different phases. I think maybe at Berkeley, I just had been interacting with the super genius people. They were probably there, but I just wasn't interacting with them because I was maybe interested in trading or something. So
yeah, maybe the super genius people were all trying to learn topology or something, or string theory, maybe.
Yeah, I think trading is a very abstract thing because, at some level, you are just thinking about these packets and other participants and things. And all the data you're receiving in your system is just packets on a wire. And everything you send out is packets on a wire. So everything you do in between is just kind of all very abstract and theoretical. So it definitely helps just be able to think theoretically.
So you're interviewing a candidate, and are you giving them brain teasers or are you not giving them brain teasers?
Me personally, I'm not, because I remember when I was graduating and I was so bad at them. And then in my everyday work, it doesn't feel very applicable. I'm not like trying to do mental math on the fly. Everything is completely automated and I can take as much time as I want. And I can just come in on the weekend and try to grind through a problem. So I'm not. I think there are still quite a few companies doing that. And I mean, I think as an IQ test, it might make sense. For me, part of the aversion is also I just think they're a little high variance. So if you ask the same question to like equal people on 2 different days, you might get different answers.
I agree with you. I think brain teasers are high variance. And so I've never relied on that in interviewing people. Usually when I interview someone, I might give them something to think about, and then I want to see how they think about it. But it's usually not some very well-posed, cut and dried thing where they have to figure out 1 trick or 2 tricks and then they can solve it. I just never had a lot of faith in that.
Yeah. I think over the years, I came to appreciate having a very diverse set of interviews for all the candidates, because some people always look good according to certain interview criteria. So you just need a bunch of different angles on things. So I don't really try to tell people to do it a certain way.
Do we have a generation of kids like studying brain teasers in order to like get through the, first 3 Jane Street, filters or something? That's a thing, right?
Yeah. Yeah. And that's the thing I regret about writing that PDF, is that I had those interview questions in there. And I don't think people should be spending their time on that. I think they should be spending their time trying to master all the material that they can learn in school, in academia, because there is a lot of really, really good material that has been synthesized. I mean, just to have the way Berkeley taught computer science was teaching you every single layer of the stack. And the fact that they could build that curriculum within just like 30 years while they're also inventing computers, they just explain it perfectly. I think you don't really get an opportunity like that once you start working to learn everything at the theoretical level. So Yeah, I think people should be studying whatever academia has produced when they're in school, whatever theoretical tools, and not brain teasers.
Yep. I also think for a kid who wasn't interested in trading from the get-go, you can imagine they're studying all this stuff. They know all about Fourier transforms and algorithms and stuff like this. And then when they end up in your world, they have to basically figure out this whole stack. Like, what is happening? Like, they might not really know anything about TCP/IP or whatever. They have to like basically build it. And I would imagine that's a significant learning curve even for very smart people.
Yeah, definitely. Yeah, so I think if people are learning brain teasers, then it's taking time away from something else. So it's almost like gaming the interview process where it makes the interview have less signal and they show up with less skills, like you're saying. So, but yeah, it is a very steep learning curve to join the industry. So I think most companies essentially have like a 1-year training program. They might call it different things, like they might call it rotation, they might call it something else, but yeah, they'll just kind of teach you how things work.
Maybe let's switch gears and talk about AI. So at this micro level that you're working, do you see large language models playing a big role? Like, are they already playing a big role? What do you forecast for the future?
Yeah, there's few applications. So for large language models, it could be used for either parsing news or text data, or it could be for programming assistants. So I think as far as programming assistants, I think people use them similarly in trading as any other programming field. So they're good for some things, not good for other things. I don't think I have anything particularly novel to add on like kind of the coding tools stack.
I think for funds that have a longer time scale than where you are, there's a lot of people searching, like thinking to themselves, like, come on, the trading firm of the future of our style, it's bound to be like AI is going to take over more and more of it from human traders and stuff over time. But I think they struggle to figure out like exactly, how to actually get value out of large language models. I think it's just a question that the industry is focused on. Nobody knows the answer.
Yeah, if we're talking about textual data sets that are being used by the trading system, then you're kind of in the space of alternate data. So alternate data is like a big research area for anybody who's predicting a couple of hours or longer. So basically, when you're trying to predict just say 1 minute in the future, then the only thing that updates every minute is the tick data. So just trades and adds and cancels. There's no real text data that's updating that frequently. So like, Twitter obviously is updating more frequently, but the actual relevant tweets might only happen like once per day per company. So when you're trying to build a data set and you're trying to say like, okay, we need X number of samples to actually fit a model, then you don't have enough samples to fit a textual model in high frequency. And then as far as alternate data for longer term traders, there are analyst reports and also kind of like news data. Those are probably the two main ones that people are trying to use LLMs for. So those are a subset of all the alternate data sources. So all the alternate data sources would include, like everything financial, like companies borrowing or shorting. Yeah, I can't really list all the alternate data sources because a lot of them are proprietary and I'm kind of too scared to start listing them.
No, don't do it.
Like,
don't do it.
What are we interested in?
Yeah.
But yeah, as far as like news goes, so news tends to be often echoing whatever's happening in the market or coming from other data sources. And maybe those other data sources are numeric. So you'd rather just go straight to the numeric data and not go through the language part. And then, analyst reports, I think people do find value in LLMs for those things. So I think for statistical arbitrage or quant systems, you're looking for a pattern that's repeating a lot. Whereas when a human's reading an analyst report, they're thinking, okay, what part of this is not repeating? What part of this is like novel or unexpected? And so that's not really what quant models are trying to do as much. But that could be a good application for them. I don't think I've heard of anybody doing that, like really trying to, build a world model and like try to think, okay, what is this company's prospects the next 5 years vis-a-vis their competitors and how the industry is changing and what business decisions they're making. I think, most people are probably using it more like a sentiment classifier still.
Yeah. So that's my impression is that's kind of an obvious thing. Like it can read the news faster than you can. But I think people have this idea that if it is really AGI or ASI in the future, like eventually it's got to make a better trader on longer timescales, like hours or days than a human. But people can't quite figure out how to get there. Yeah.
I mean, I know a bunch of people that work kind of as analysts at banks or in hedge funds. I mean, they used to be banks, now they're hedge funds. So they'll kind of know one particular sector and they'll say, okay, this sector, the key performance indicator for this sector is the number of sales or number of big customers or their current to the customers. And then they'll call the CEOs and they'll ask, like, what do you think about your competitors? And they'll visit the factory and they'll check, okay, this company actually listed this address, or is it a phony address? I mean, some of those things I think the AI could do. Some it couldn't. Like, I don't think the AI could currently call the CEO. And, like, yeah, so maybe.
Eventually.
Yeah, eventually.
Yeah. So Max, what is a day like for you? Like, you get up in the morning. What time do you have to get up?
I guess every company's different, so I could maybe talk about Headlands, although it could be different at different companies. So for us, we have a pretty flexible schedule. We just are doing research on historical data, and we're all incentivized to work as hard as we can. So some people like to wake up late, some people like to wake up early. I tend to wake up early. But yeah, then you just start to, come in, check your jobs from overnight, see what failed, maybe restart something, maybe think about what experiments to run next, and then send some emails. The market's traded 24 hours, so you can always kind of see what's happening there, but we don't really intervene or touch it at all. So we have the operations team that's kind of in charge of monitoring the trading, and so researchers don't have to do that. That's definitely different as some other companies. Throughout the day, I mean, it's just doing research. So when you're in the flow state, then maybe you're coding something large or you're analyzing data. And then when you get near the end of the day, you start to think, what am I going to run overnight so I can take use of all the cycles? But yeah, there's no real routine. I mean, it's kind of like you're building a large technology. So the way I like to think about the career is like everyone is building a technology vertical. And if you can make the technology better than the competitor, then you'll have an edge in the market. So, maybe at Google, just make it concrete. Like at Google, this could be building Google Maps, or it could be building some backend that makes them able to do data or do pull requests more efficiently or something like that. So in trading, that could be like, how do you store data, or some type of alpha, or some type of risk management system. So if you have a unique idea on it, then it might take you 1 year to kind of become an expert on how the company currently does it, and kind of just know how to operate it, know how to run experiments on it, know how to make iterative improvements. And then it might take you another year to kind of like become a thought leader on like how it might work. And then you start to build, the new version that kind of pushes forward the frontier. That could take a few years. Maybe you start to manage people because you need extra help, and you start to hit some things that you don't have the right skill set for. So maybe you need to work with some developers or some other quants that kind of fill in your skill set. And then ideally, eventually you kind of build this particular piece of technology to be the best in the world. And then you're trying to think what to do next, and think, how do I get new ideas? So that might be like, the multi-year career path as opposed to the day-to-day. But everything in the day-to-day is always similar. Like, it's a similar cycle, like show up, check the experiments, code, look at data, launch experiments.
So when you described your classmates at Berkeley and how most of them or many of them didn't really last that long in the industry, does that mean when you get new people in who are, say, fresh out of college or grad school, and you're kind of watching them, like, do you like conclude after a while, like, this guy has to be managed out, he's really not appropriate, or are they leaving of their own volition, but they could have stayed? Like, how does that work?
Yeah, I'm trying to think, because it changes over time. And also, like, my cohort that I graduated with, as opposed to Headlands, is completely different, right? So like the cohort that I graduated with, they ended up at all different companies, and, there's a lot of different reasons. So a company might have hit hard times. Maybe somebody ended up in a seat where they didn't have much upside, or they weren't excited about the problems. So they could have left for any reason, and then maybe they just decided, like, oh, tech looks interesting, or they want to live in a different location besides Chicago or New York. All the normal life things. I just don't think there was like a very strong magnetic pull for them to stay in the industry for a long period of time. And there's so many other things that are interesting to do.
Got it. So it's not like you're like deliberately attriting the people that enter your firm over some time scale. Like, you'd be happy to, like, if they like it and they want to stay, there's a decent chance they're good enough to stay.
Yeah, if we're talking about Headlands, then yeah, we try to make it so everyone can be successful and find a place where they can add value and they can grow. And I think that's true for most firms. I think there are a few firms that have maybe like a 1-year training program, and at the end they cut like 30%. And I'm not totally sure why they do that. I think one maybe more positive explanation could be that when you hire undergrads, then you have to wait 9 months for them to graduate. So you hire them in September, they graduate in May. Then you have to train them. And sorry, I guess I'm missing a step. So when you hire them, you don't know how many are actually going to sign, because you kind of have to blast all the offers before you know how many are going to sign. There's no like early action or something like that. So they may have overhired And then also the market's cyclical. So after a year, when those people are finally up to speed, maybe they want to kind of like right size the firm. So yeah, so we try hard not to do that because like it could be bad for the culture, bad for morale. But I think some other companies might have a structure where they're kind of have less problems with people leaving. I think for us, because we're so collaborative and yeah, we all work together, so we don't really want to have people leave.
So you mentioned like eventually all the successful firms in your space, they become basically trading their own money. In that case, I guess AUM is really not the metric you guys care about, right? It's basically just what's your return rate.
Yeah, I think there's two things people care about. So one is the P&L. So that's kind of like the trading profit after the cost of trading, but before the bonuses and other expenses, and the market share. So like, are you number one, number two, number three on a given exchange? And most exchanges publish the rank of each participant on each month. So it's anonymized. So you know your own rank. You don't know the other company's ranks, but you can kind of back out who's maybe number one or number two.
Got it. Now, my picture of a more traditional sort of longer duration hedge fund is, most of the comp is going to a limited number of PMs who, are killing it. They have a P&L attached to their name and it's huge. And so they get huge bonuses, or maybe there's some famous guy who founded the firm who can raise a lot of money from the LPs. For you, like what determines like who is the quant in HFT who like this guy gets credit for this chunk of the P&L and like we're going to give him this much money? Like, how does that work?
Well, like I was talking about earlier, I mean, we're building this technology. So you could just think about it like any other technology firm. So I think, yeah, like probably whoever at Google created Google Maps got paid really well. And then maybe some less successful product, like they don't have as strong of a case, something like that. But yeah, I mean, it's a pretty small firm, and all the firms in the industry are pretty small. So people know kind of who is the most prolific and breaking through the hardest barriers.
You have a way internally just on the team to figure out like who's contributing the most and who deserves the biggest comp.
Yeah, I think one thing, like when you're not in the industry, things seem very opaque. But when you're in the industry, like everything is very, very, very transparent. So like, for example, we can backtest every change. And so we kind of know how important every change is. And some changes, there's also intermediate metrics. So if you're building a new alpha, then you can measure, the correlation to the future returns. And so it's crystal clear kind of like what is significant and what's not significant. Occasionally there's a change that's kind of like very orthogonal and kind of like, but I mean, those things maybe after a year or two, then you have the P&L. So then it's crystal clear again. Maybe at the time it was added, it wasn't totally clear. Like, say if you're changing the market impact model, then you don't know for sure whether it's better or worse, but you will see after a year. I think similarly, like when you're not in the industry and you hear alphas, it's like, oh, it's something very secret, something very complicated, very esoteric. And like, of course they are very secret, but in practice, there's so much alpha. I mean, because, like you can find some alphas published online. Like for example, when gold goes up, silver goes up, right? So that's an alpha, and you can build a model for that. And you can basically make the model as arbitrarily complicated as you want. And it could still make sense because, sometimes they both move up because they're precious metals, but sometimes, maybe silver is more of an industrial metal, or maybe the mine in one of the regions produces both gold and silver, and in a different region, it only produces gold and doesn't produce silver because of like, however, the geography works. Or maybe you're looking at the, micro scale. So it's like, there could be effects around gold being traded in Chicago, London, Japan. So you could look for effects there. You could look at how the order books are different. So they have different tick sizes and things like that. So you can basically make those models arbitrarily complex. And that would just be one kind of alpha theme. There's many other alpha themes, like, the main categories be like supply and demand. So when people are buying, they'll typically keep buying. If you're looking on a microsecond scale, it's like if you wanted to predict the sales on Amazon, like you'd probably have a heavy weight on whether there's a sale recently. And, so if there's a sale recently, maybe it's Black Friday, right? So then maybe people are racing to buy things. And you see the same thing in the market. Like if somebody buys, probably soon after somebody will buy. And I mean, that alpha has been published by probably like Irene Aldrich or other people in academia, but you can make it arbitrarily complicated. So, the alpha model will be like adding different features or trying to use better statistical tools to estimate the signal from the noise better and make it generalize further into the future or over other market conditions.
But I think what you're describing, while it's very logical for like someone with a quantity kind of bent, like it's very different from, a more traditional, say, equity hedge fund. Some guy has a big year and there's always going to be this question like, was Joe lucky or does Joe really, really have alpha, right? Like I think that even after 5 years at the firm, they could just be like, this guy just caught one trend and made a shit ton of money and he doesn't really have alpha. I think there's some kind of irreducible uncertainty about the whole thing.
Yeah, I don't want to downplay like how well they understand their business, because like the closer you get to a certain business, then you always find out that they kind of know what's going on, and it's not that trivial to just like enter it and tell them how to do it better. And so, yeah, I mean, I think because I'm in HFT and then I see, oh, actually HFT is like very, very clear. So I can see StatArb. I mean, StatArb, they have a similar kind of alpha setup. And so they might have tens of thousands of alphas because they don't have the latency ceiling. And they can measure on a day-to-day basis the P&L of every alpha.
Mm-hmm.
And so there's definitely more variance because like maybe their alpha is kind of the central limit theorem only kicks in over the month scale instead of the hour scale. Yeah, they can tell very, very clearly kind of like which alpha worked, which alpha didn't work.
How about this? Like the alpha is all concentrated in, I bought NVIDIA and I've been holding it for the last three years.
But yeah, I mean, we're not doing that.
Yeah.
We're trading a lot.
Yeah. Yeah. No, you're at this sort of hyper rational limit of all this stuff compared to, more kind of big equity hedge funds and things like that.
But yeah, I don't invest in those type of funds because I can't tell whether the managers have skill or not. I've invested with, say a guy I knew from Berkeley who's running a hedge fund. And I've talked to him about his thought process, and it's very, very consistent and it matches kind of how I think the markets work. And I think his research process kind of works, even if there are HFTs and setup firms below him, because I think he's doing something that kind of builds on top of that. So yeah, I basically think of the whole market as one system for pricing. So it's like a pricing computer, and each layer is responsible for different things. So, the HFT layer is responsible for inventory risk and doing short-term price adjustments. And then setup layer is responsible for doing maybe second order adjustments and propagating the price changes out to like large universes. So if Warren Buffett is buying Geico, then he's not going to go place a microscopic trade on all the other insurance companies that kind of reflect like what fraction of his view on that company is that company versus that industry. So you need some trading firms to kind of propagate out those views to all the related instruments. But yeah, like my buddy from college, I think, he's like I said, calling the CEO, he's visiting the factory. And so he's adding exactly the new information that is needed at that layer. And
yeah,
he's expressing his views over the time horizon that I think they will realize on. And yeah, of course, he's had a good track record too, which, always makes it feel better. But
that's great. Well, that's a great kind of overview of the different time scales and size scales of the whole industry, the finance industry. So maybe we can close out with advice that you have for young people like my son who wants to go into this field. What's your advice for a college sophomore or junior who wants to go into this field? What should they be doing?
Yes, we already went over the academic classes. I think they should apply for an internship. It will help if you do an internship at a tech firm, because tech firms generally have better kind of coding practices and better systems. And at tech firms, you can work on real problems. A lot of trading firms, if they have internships, they're kind of doing toy problems because they don't want to share the real IP. So yeah, do an internship or two, maybe an internship in tech, an internship in trading. Try to build a system on your own. From what I hear from the college students, I think Calci is pretty good. They have no fees, and it's kind of a level playing field for big participants versus people in school. Like you're just connecting over the internet, so there's no edge in how you're connecting. Yeah, maybe do Calci. That's about it. Yeah, just study hard in school and then apply when you get near graduation. But I mean, I think there's a lot of other areas in the economy that are good places to work too. Like the AI boom is really interesting. So I think, yeah, just do trading if you're really passionate about trading, but otherwise there's a lot of interesting paths.
His dad is telling him he should work as an AI researcher, but kids never do what their dads tell them.
Yeah, usually the opposite.
Great. Well, Max, I really appreciate your time. I mean, probably this hour of your time is worth a shit ton of money. So really appreciate it. And I'm sure the viewers who are interested in this subject got a lot out of it.
Yeah, I hope so. Yeah, thanks for having me.
Great.